Hi everyone, this is lecture 17 of the 2026 mentorship program. In this lecture, I will be doing a top-down analysis. And if you have been going to the lecture, this is just part of the routine. It's one of our weekly routine and going through the major currency. Me showing you guys what I'm interested in and what I'm currently anticipating price to do throughout the week and what is my draw on liquidity. Now, going in this lecture up to this part of the lecture, into this lecture 17, I will be going further into the learning part. So, I will be putting more time into showing you guys key factors that I use in taking trades and how I determine my bias. I know I've been talking about it for a while, and there was a comment that someone asked for me to spend more time on the lower time frame to discuss more on the lower time frame, which is which the person was personally talking about the 1 hour and the 15 minutes. Now I will do that in the next lecture. I think I've already spent enough time on the lower time frame. I've talked about what I was interested in, what led in me taking the trade, what was the shift in structure, what was price supporting or resisting for before actually taking the trade. I think that's already covered, but I will try to spend more time on the 1 hour time frame at the same time on the 15 minutes. Try to explain it more better. So I'll try my best to give out the message that I'm trying to give out. You just need to do your own personal research because I have already give you guys the key points of interest I was interested in. If you spend more time looking at it based on your own personal trading plan, you can easily understand what price did and easily know what to do in price even without my own personal opinion on what price did. So it's more about you doing the work, but I will do a little improvement in it, talk more about the lower time frame, and we'll see how it goes. So let's move to the charts. Let's talk about the dollar index. Let's move this to the charts. Okay. So let's move to the dollar index and let's make this full screen. If you have gone through the last lecture, I talked about how price delivered. Our overall bias is anticipating lower prices in price, running out the sell side liquidity. That have been the bias for around 3 weeks, starting from the moment price retraced into the daily fair value gap. We have been looking for lower prices, and last week price delivered as a down close candle on the weekly time frame. So on the weekly time frame, you can see that last week closed as a down close candle, and if we were to look for a continuation of the trend, here's a swing high. Looking at this price action, this is a swing high, and if there is a swing high, we're looking at price rolling out a swing low. And looking at this price action, the next swing low is the sell side liquidity. I told you guys, whenever you're determining your bias, pay attention to the trend and pay attention to the candlestick formation. There's a clear candlestick formation of anticipating lower prices. Here is a bearish engulfing candle, a bearish engulfing candle inside a weekly fair value gap. and the bearish engulfing candle led in price forming a swing high. That is a clear indication of anticipating lower prices. On the daily time frame, looking at this price action, price retrace traded through the daily fair value gap. Now I moved the daily fair value gap so that you guys can look at the chart more clearly. But look at this fair value gap. I talked about this fair value gap on the trade review on the last lecture, that looking at price using the fair value gap as a resistance area to trade lower. A retracement. Currently, price already retraced to the daily fair value gap. So I'm just paying attention to the candlestick to look for that key reversal point in anticipating lower prices. First drawn liquidity will be previous week low. Once price takes out previous week low, the overall target is the sell side liquidity. So looking at this price action, I've broken down one of the key factors in you understanding bias. I've told you guys that there's a daily shift in structure trading through the fair value gap. And there is a fair value gap, which means there is a point of interest price is currently trading to, or price is currently at. Currently, price is at the daily fair value gap. If price were to use daily fair value gap as a resistance, we will be anticipating lower prices. And the next drawn liquidity should be the previous week low and the overall target of the sell side liquidity. On the 4-hour time frame, now going into the lower time frame, I think this was the reason this was the reason why they gave out the comment that I should explain more on those key times for you to actually take a trade. I should talk about what are the key factors you need to see in price before actually taking a trade on the lower time frame. So on the 4-hour time frame, you just need to see the 4-hour time frame aligned with the idea in price trading lower. So a run, if the 4-hour trend were to fail in trading higher to run the swing low, that is a shift in structure, which you will be anticipating lower prices. Just like the price action inside the daily fair value gap, you can see the shift running out the swing low, retracement to a 1-hour fair value gap, used it as a resistance. Now looking at this fair value gap, it's still the same to a 4-hour fair value gap. That was the reason I used both time frame. I look at the 4-hour and the 1-hour, looking at the same idea, paying attention to the trend on how price is reacting to a higher time frame point of interest. A higher time frame points of interest are weekly buy side liquidity, weekly sell side liquidity, weekly fair value gap. The same thing goes to a daily point of interest. Those are higher time frame points of interest, daily buy side liquidity, daily sell side liquidity, daily fair value gap, new week opening gap. Those are higher time frame points of interest. And looking at this price action, price is currently below a new week opening gap. Below a new week opening gap, we are anticipating lower prices. Moving to the 1-hour time frame, we just need to see the trend fail in trading higher. But if price was to trade higher to run, now I want to tell you guys kind of the phase that I'm looking at price. What would if price was to do? Let me try to mention the amount of phase that I think I have an idea of on how to take advantage of it. So if price were to run the swing high, right? If price were to run Wednesday's high, the bias is still in place. Price is still aligned with our idea. If price were to trade higher on Monday to run weekly, to run Wednesday high, price is still aligned with the bias. Sorry, let me turn off this alarm. If price were to run the weekly high, price is still fully aligned with the idea because a run on Wednesday high leading to a 1 hour shift in structure, you can still anticipate lower prices. It makes it a high probability setup if price were to take out a premium liquidity before actually trading lower. It makes it a classic power of trade. So this is part of the scenario in anticipating lower prices. A run on this high, a shift in structure, anticipating lower prices. Your first drawn liquidity should be the previous week low. That should be Wednesday's low. So this is one of the phase for you to anticipate if price were to trade lower. Now the second is that price didn't run out the high. Price only traded higher, took out a 1 hour point of interest, like a 1 hour buy side liquidity. The point is that we just need to see a premium price above the opening price, which currently priced at a premium. If price were to expect a 1 hour point of interest or a 4 hour point of interest above the opening price, is still a premium price. So trading to a 1 hour point of interest might be a run on the buy side liquidity or we're expecting the other block. As long as price respect it, trade lower in running out the swing low, a retracement to a 1 hour point of interest or a 4 hour point of interest, you will be anticipating lower prices to trade lower. As long as price is above the opening price and price trades below the opening price with a shift in structure, and you will be anticipating lower prices. But the price will keep on trading higher to run Wednesday high, previous Wednesday high, a 1 hour shift in structure or a 4 hour shift in structure, you will be anticipating lower prices. And if you're trading the currency that I'm trading in this lecture on the 1026 lecture, you know that you need to understand dollar before actually trading any other currency. You need to know the draw on liquidity on the dollar index before actually taking any trade on Euro USD, GBP USD, or USD JPY. Now, USD JPY, you still need to look at what price is doing on the JPY index. That will give you a clear perspective. You can still look at the 30-year bond of the Japanese yen, or you look at 20 years bond of the Japanese yen. Those will give you a clear perspective on the interest rates, on where are people focused on if they want a stronger JPY currency or they want a weaker JPY currency. Those factors will give you a clear perspective on what the JPY pair will be doing on a weekly basis. So next, let's move to Euro USD. Move to the weekly time frame. On the weekly time frame, the idea is still the same, just inverse correlated with the dollar index. I think I've mentioned that enough in these lectures. I've talked about how the dollar is inverse correlated to Euro USD. So last week, price closed as an up close candle after respecting the weekly fair value gap at the same time, the daily fair value gap, anticipating higher prices to run the previous week high and a continuation. Look at the candlestick formation. You can see the trend already from a weekly perspective. So going down to the daily time frame is just to have more details on how price have been trading inside the weekly fair value gap. At the same time, it's aligned with the daily fair value gap. Traded lower, internal shift, took out the swing low, created a new swing high, running out this high, makes it a shift in structure. Daily order block, here's a daily order block. Price retrace to the daily order block. You are anticipating higher prices and your draw on liquidity is a run on previous week high. This should be your first draw on liquidity to look at price to run. Price running out the high, then a continuation in price running out the overall target, which is the buy side liquidity. So if I were to swing trade, this should be a direct buy. If I were to hold trade for a month, let's say a month or two, for those that do take position trading, this is a direct buy. You just need to click the buy button because it's at a daily point of interest and we have a clear target. This should be a trade for you to take advantage of. But because I normally trade a weekly expansion, I need more confirmation on the 4 hour and the 1 hour time frame. But clearly, you can see the trend. You can see the trend in this market. If I was to take away all the position tools, clearly you can see the shift in structure, trading higher, taking out the swing high. Here's the fair value gap, and here's the breakers block. Here's the breakers block, a retracement to the breakers block. We expected it. Currently, Friday took out Thursday's low. Monday, if I were to anticipate price in trading higher. The reason I'm not actually trading today is because there's a holiday. I think there's a holiday. When I looked at Forex Factory on the US, there's a holiday today, so I don't like trading when there is a holiday. Mostly because there's a low volatility in price, and in some cases, you might find an abnormal trading pattern that might trade against the buyers, or you can see price trading in one direction that the next day will just go completely against that direction. So I don't normally try to get involved in days like that. But the idea is still the same of anticipating higher prices. Now moving to the 4 hour time frame. Let's go to the 4 hour time frame. On the 4 hour time frame, look at how price have been reacting from the breakers block. How price have been reacting from the breakers block. Price have been consolidating. If you want to see an internal shift in price, pay attention to how price is reacting to the 4 hour fair value gap. A trade above 4 hour fair value gap makes it a shift in structure. It's very important to understand trend, understand how price is trading from a point of interest. A daily point of interest, a 4 hour fair value gap. A trade above the 4 hour fair value gap makes it a shift in structure. But looking at it from a 1 hour perspective might give you an early entry in this price action. Looking at it from a 1 hour perspective will give you an early entry. So on a 1 hour time frame, looking at this price action from a 1 hour time frame perspective, price took out Thursday's low, did the trend higher, and if we were to see a continuation in price creating a new swing high, running out Friday's high, it should be an example, running out Friday's high, then a continuation to this consolidation, a retracement to the consolidation should be a buy entry in anticipating higher prices. And this is one of the phase if price were to create a price action similar to this. But if price were to trade lower, run out a sell side liquidity, and there's a shift in structure, you can still anticipate higher prices. Point is that price at a discount. What is a discount point of interest that price will use before actually trading higher? And in this scenario, you can see there are still Wednesday low, previous week Wednesday low. If price were to run previous week Wednesday low, you can still anticipate higher prices because as long as there's a 1 hour shift in structure in the price action, you can anticipate higher prices. And your first drawn liquidity should be the 4 hour fair value gap, and your overall target should be the previous week high. Pay attention to how price is trading. Now, I will be giving you guys an update on which scenario price did on the Telegram channel. Now, I haven't been that active on the Telegram channel for a while. I normally just post one or two about when the next lecture is going to be out. I haven't been giving out market sentiment or giving you guys an update on what I'm anticipating on a weekly basis on the Telegram channel for a while now. But I will try to be more active on the Telegram channel. And I wanted to make it a group where I can interact with other traders that are trying to learn from my content. But I'm still on that topic. I haven't think about doing it, but I would think on doing it. Have a general group where you can post about your trade idea and you can have a comment on if what you're looking at in price is aligned with other people's perspective. And the reason is that the reason I haven't think about doing it completely is because trading is more of a solo game. It's about you being a lone wolf in whatever idea you have in the market, trusting your idea and watching your idea play out. So having a group where you can share your idea, I don't think it will be that helpful to other trader. But I think it makes it a sense of a community where you feel like you're not alone in the trading journey, because it's sometimes in the trading journey it feels like you're alone in your struggling stage and where you're trying to find a footing in the trading in the industry. So I think the group will help in that perspective to see other traders fail and to see other trader progress and to see other trader learn from their mistakes. It might help, not me talking all the time or me dropping my own personal perspective all the time. You have access to other trader to speak to other trader. Although we do have we will be having a moderator in the Telegram group that will be fishing out those trying to use the group for advertising or doing to spam the group with content that are not related to the group. So for now, the group is not available. But once it is available, it will be posted in the Telegram channel. You just need to join the Telegram channel and be active on the Telegram channel. Once I come around the idea and I find more benefit in me having that group, then I will be creating the group and you have access to the group and you can easily share your own personal trade idea or whatever you're looking at in price in that group. So let's move to the GBP USD. GBP USD, last week I told you guys that I took a trade, but I closed it at a 2 hour before the closing price. So let's talk about the whole idea in me taking the trade and what I'm currently looking at this week. Clearly on the weekly time frame, we can see that GBP USD is in an uptrend. Clearly you can see from where price is currently at, how price closed last week, after trading into the weekly fair value gap, closing as an up close candle, forming a swing low. Next drawn liquidity should be the buy side liquidity, and the overall target is the buy side liquidity. They're both buy side liquidity. It is just a daily point of interest for price to run. This week, anticipating an up close candle to run the buy side liquidity. Daily time frame. Last week, after price traded to the new week opening gap, took out Thursday's low, there was a 1 hour shift in structure leading to the trade that I took. But look at the trade idea, is still aligned. We're expecting the new week opening gap. Here's an up close candle after running out Thursday's low. Now, for those that are well invested into the CRT pattern, you know that this is a clear indication of a reversal in anticipating a run on Thursday's high or an overall run on Wednesday's high. If you were well invested into CRT, now CRT, I told you guys, as long as you understand price action correctly, you can easily point out those key areas where there is a complete correlation between trend and a CRT pattern, which is a candlestick pattern. Here's the trend, an uptrend. Price we're expecting a new week opening gap with a CRT pattern of a reversal from a downtrend to an uptrend. So the scenario is that price stays above the candle's high, stays above the candle's low, sorry, not saying price running out the candle's low, makes it a high probability of looking at price trading higher. So if you're a day trader, personally, I wouldn't advise you guys to trade today. It's Monday and it's a holiday, so don't trade out today. Just look at how price closed today and look at what is attracting the 1 hour on a discount perspective. While there's a discount price, look to enter on that discount price in anticipating higher prices and look at previous day high as your target on GBP USD. Now, for those that are using GBP USD as your day trading pair. Now, on the 4 hour time frame, you can see the trend more clearly. We expected a new week opening gap, traded above the daily fair value gap, currently using the daily fair value gap as its support in trading higher. But you can see the trend more clearly that price is in an uptrend. The same thing goes to the 1 hour time frame. That was where I actually took the trade. I talked about it. You can see from the 1 hour fair value gap, that was the entry. And currently, price is still in an uptrend in anticipating higher prices. So for a re-entry, I want to see price trade higher. The fair value gap should be an area where I will be using for a re-entry in anticipating a complete run on the buy side liquidity. That's an area I'm looking at for a re-entry. So that's my idea on GBP USD. Make sure you do your own personal study. Mark out those areas that I didn't mark out in my own chart. I don't want my chart to be that crowdy. If you notice, most of the points of interest are not stretched out completely. If you notice, price is currently resisting inside the new week opening gap. A trade above the new week opening gap leading to a candle close, there's a high chances of price trading to the next new week opening gap, which is this new week opening gap. And if price were to trade above this opening gap, there's a clear indication the price is going for a buy side liquidity. Now, I will talk more about new week opening gap and how I use it when there's a clear example. Know that if you're anticipating higher prices and prices trading through a new week opening gap, that trend is in a high trend. Here's a good example. Trading through this new week opening gap, you can see how aggressive price traded lower. Now, if I were to look further back, there will be a new week opening gap that led to a support, but I don't want to spend more time in this currency. I think the whole general idea is that we're anticipating higher prices on the dollar index. So we're anticipating lower prices on the dollar index. So currency like the Euro USD, JP USD will be anticipating higher prices. The only reason I'm talking about the individual currency is that I'm showing you guys the right timing for you to actually press the buy button. So next is the USD JPY. Let's go to the weekly time frame. On the weekly time frame, let's take this out. Price respected the weekly fair value gap. At the same time, it's aligned with the daily fair value gap last week. Impulsive price trading lower. Current run on liquidity, which is quite obvious, is a run on the sell side liquidity. If we're on the sell side liquidity, here's my draw on liquidity. Daily time frame. Looking at price trading above the opening price, trading higher to the daily fair value gap. This is an area I will be looking at price to use as a resistance area to trade lower to run the sell side liquidity. The bias is still aligned. This is just a brief retracement to a daily point of interest before it completes trend lower, just like a power of three. As soon as price takes out a point of interest and price is willing to trade lower, the 1 hour shift to structure will be around this range. Now I'm just looking at what I'm currently seeing in price, but compared to how price traded last week and saying that the trend is aligned with the JPY index, it's safe to anticipate a continuation trading lower as soon as price trades to the daily fair value gap. On the 4 hour time frame, you can see the trend more clearly. This is just a consolidation. As soon as price takes out the consolidation, takes out the buy side liquidity, so the daily fair value gap, high chances in price trading lower in running out the sell side liquidity. Same goes to the 1 hour time frame. If price were to trade to the daily fair value gap, take out the daily fair value gap, anticipating lower prices to run the sell side liquidity. So I think I've given you guys the lower time frame perspective on what to wait for, what are the key areas, and what are the key structure for you to wait for before actually taking any trade. Now let's talk about the JPY index. I've mentioned the currency a while. It's gold. Oh, let's go to the JPY index. So here's the last currency. On the JPY index from a daily perspective, I must look at the daily perspective. You can see there's a shift in structure. Last week, price were expected. A daily order block created a new swing high. And looking at this price action, you can see it's quite similar to USD JPY. So a retracement to the daily fair value gap. I will be anticipating a continuation trading higher. So you need to look at the JPY index whenever you're trading the USD JPY. I find it very useful. Now, you don't actually need it that much, but it gives you a sense of confidence when the JPY index is aligned with the USD JPY. When they're aligned, that is when I see impulsive trends trading to the draw on liquidity. It has been long since I've been tracking the currency. I think it was last year around August that I've been paying attention to how the JPY index have been trading, looking at those correlation, seeing how it is correlated. And since then, I've have a full interest on looking at the JPY index, just as how I've been looking at the dollar index. When there's a correlation within those currency, it gives me a high probability setup. I can say if we were to compare it to a win rate, it gives me around an 80 to 90% win rate in a strong trend that moves around a 4 hour trade. So if you were to wait for those setups that are aligned, it will give you a high probability setups. So that is it for this lecture. I think I've talked about the major currency and you guys understand my own points of interest. Now, regarding the Telegram group and the Telegram channel, I will try to be active on the Telegram channel to give you guys more market updates and around about the Telegram group. As long as you are in the Telegram channel, if I decide to open up the group so that you guys can easily interact with other traders in the 2026 mentorship program to share ideas. Once I decide on doing that, the link will be posted in the Telegram channel. And the next video that I'll be doing after opening up the group, I'll talk about it, and the link will be in the description below. But make sure you are in the Telegram channel and in the Telegram group once it is open, because the idea will be delivered and the information will be delivered to you guys on both platforms or on both groups and channel. So make sure you're on the Telegram channel. At the same time, if I were to open the group, you have the link to the group in the Telegram channel. That is it for this lecture. See you guys in the next lecture.